Welcome back to Revenue Margin, brought to you by Rob Malenik. I am just so tired of people wanting to buy a business and they're focused on wanting to build an income. Stop talking about income. Income creates taxes. I want to share the most effective wealth building strategies that I've seen throughout my career is working with business owners that understand that an income is not their goal. The strategy that many successful entrepreneurs use and that I implement for companies on a consistent basis is surprisingly few that most of you never understand or actually are intentionally not planning for. You need to combine business ownership with real estate ownership. Now, that doesn't mean you need to go and buy a building for your business. You need to understand that most successful business owners spend their time focused on increasing sales, hiring great people, improving operations, growing profits, all extremely important to generating wealth. Because a profitable business creates cash flow. Cash flow creates wealth. And here's what many business owners miss on these opportunities. They're building a successful business. They all of a sudden hit $500,000. They hit $1,000,000. They're going to target $2 million, $3 million. And I'm like, wow. Every single time you do that, you're paying 40 to 50% of that money in taxes to the government. When they build a successful company, that future financial growth is looked at as basically an asset. The business slows down or eventually gets sold, and they haven't built any actual assets beyond that business that you generated. And yes, you might have made $1 million, $2 million, $3 million. But I see people, they go buy the lake home on Lake Minnetonka here in the Twin Cities. They go buy a second home up north. They go and spend lavishly on vehicles and cars. And at the end of the day, they're spending 50% of that every single dollar they make to the IRS, and they don't have wealth. You need to start looking at real estate as one of the best places to get started to be able to generate transformational wealth for you and your family. Let's use a simple example. Suppose your business is leasing a warehouse or office space. Every month you're paying rent to someone else, helping them build up equity. Now imagine instead you would purchase that building through a separate real estate entity that you own. Your operating business could still pay rent just like before, but now instead of you having rent go to somebody else, you're building equity with that investment. You're actually able to use depreciation on that investment. You're able to do cost segregation studies on that investment. And over time, you potentially can have something that has appreciation value in the property value growth. Now you're building two assets. But you're also, the key part about this is that I sometimes don't like that because I think you do build too much eggs in one basket per se. Sometimes there's actually benefits of actually purchasing other assets in other places, other investment opportunities to be able to spread your financial wealth and growth. One of the biggest advantages comes when it's time to sell your business. Many owners assume they can sell everything together, and that's not always the best strategy. If you own the real estate separately, you may be able to sell the operating business while keeping the building and let the other person continue paying you rent. Instead of losing all your income after selling your business, you could then create an asset that will continue to generate monthly rental income for years to come. And rental income is beneficial. But to be clear, this isn't about real estate. It's because it's just available. Every investment should be making financial sense. You need to have cash flow that works for you. You need to start thinking about not increasing your income, but thinking about increasing your wealth. And the same goes for acquiring other businesses. Growth isn't about just getting bigger and about net income growth. It's about becoming more valuable for as a firm. And so one of acquisitions, when I talk to people about this, is that I want to grow this business, or are you going to be building wealth? Which one are you going to try to do? Two very different things and two very different goals. And so at the end of the day, when you think about this, you have to determine what kind of strategy you're going to be taking. What assets are you taking into account and making work for you? And how are you strategizing within the structure of your firm with acquisitions, both in the same industry, maybe other business lines, potentially into real estate, how you're taking advantage of different tax treatments that you can take into account, like depreciation on those buildings, cost segregation studies, how to be able to move things into trusts on the asset, either the business and the real estate, to avoid taxation in the future. Avoiding taxes is one of the fastest way to wealth, and but there's so many techniques you can do that from a legal perspective. At the end of the day, those decisions often make a bigger impact on your financial future than simply increasing revenue for another 5 or 10% per year. And so, if you're a business owner, you'd like to discuss how to use your business to build long term wealth through strategic planning, acquisitions, real estate ownership, I'd love to have a conversation with you. On the podcast description, there's a link below that let's sit down and talk. Free 1 hour consultation to talk about your business and what we could do potentially to help you grow. I'm looking to hear from you all. Have a great day.